Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner. I'm joining you from what is an overcast and relatively cool Denver, Colorado this morning. I'm pleased to be joined on this Wednesday by Mr. Brent Morris, fellow Schwab coach. Good morning, Brent. How you doing?
I'm doing great, Kevin. It's good to be on with you. It's been a couple weeks, and this always, I always feel I know we have a lot of people here watching who are seeking to learn, but I feel I learn something every time I come here with you, Kevin, as well. So I love looking at the markets together with you.
Well, I appreciate that. And of course, we say it all the time, Brent, this is a market is all about continuing the learning process. It really doesn't end. It's been just last week was 28 years in the industry for me. And I feel like I'm learning every single week nonetheless. So we're glad you're all here with us as well, everybody. We are pleased to be joined by Barbara Armstrong there in the chat. She'll keep an eye on your comments and questions that Brent and I are unable to get to. But of course, we enjoy hearing from you. Please feel free to post in there for the duration of the show. We'll go about 45 minutes in total and certainly try to bring your comments and questions into our discussion. If you're not already doing so, take a minute and follow Brent and Barb and me on X. You can do that for us individually. Barb Armstrong CS, Brent Morris CS, and Kevin Horner CS. We really appreciate that. And lastly, make sure you're subscribed to the Schwab YouTube coaching channel here, everybody. Okay, some brief disclosures. I'll remind you that our conversation is exclusively for your information and your education. Remember, we do not make recommendations here. We do not endorse a specific approach or strategy to trading the market. Additionally, we talk technical analysis quite a bit in this show. We'll remind you that technical analysis is merely one component of your decision-making puzzle. We encourage you to utilize multiple pieces when you're making your decisions, and ultimately, we do not want you making decisions exclusively off technical analysis. Now, in terms of our agenda, we are going to stay the course here, everybody. We'll start broadly with our big indices. We'll look at the S&P 500, the NASDAQ 100, and the Russell 2000, the semiconductor group with the SOX index, which is broken out, it might seem today. We'll peek in on that, look at some sectors that are moving, and there's always stocks in the news, everybody. So we got plenty to get to in a very speedy session, as always. So, Brent, taking a peek at the S&P 500, we appear to be closing in on all-time highs. What are your thoughts?
We're flirting with all-time highs. We're not quite there, but hey, the trend continues up, and it almost seems, I don't know what's going to happen, but it just seems like there's this inevitability about us breaking up higher above there. Now, who knows? Things can certainly turn around in the market right now, but that's the way the trend has been heading. Yesterday, on the NASDAQ, and I know I'm jumping a little bit ahead, we had a close, an all-time high close. We're not quite there on the S&P 500, but they're kind of going hand in hand almost in the way they're going. Now, are we going to see some resistance there? We have some competing demands. We have a trend bouncing off that 20-day moving average a couple days ago, and will we see some resistance, though? That's the question. And it wouldn't surprise me if we take a little bit of a breather because, hey, look, the market has shrugged off a lot of potential concerns in the market, and it's still holding strong. You can see that strength is kind of reflected in that RSI as well, hugging up above that 60 level. That usually indicates a pretty strong market.
Yeah, I agree with a lot of what you said, Brent, and I'm starting to wonder if we as traders, depending on your time frame, of course, if you're a short-term trader, you've got a couple of levels that are beneath us that can provide areas where you would move on from SPX level type trades. For example, a big gap was created just yesterday, Brent, moving off of the Monday weakness that brought the 20-day test here. We had a fantastic move just yesterday to gap higher through what many said was resistance, and we just basically took it out with our open trade. So a lot of traders in the short run here, Brent, could start positioning for some exit strategies, and I hope everybody's aware that I'm going to speak now a little bit about management of your scenarios, and we definitely have a support ledge with that gap. You've got one beneath us right with the Monday low, coincident with the breakdown below the 20-day moving average, horizontal support there as well. But Brent, if you are uncertain about, the potential to break through the 61.47 with any conviction, do you feel like traders who've been buyers back here? I mean, again, everything we know since April 23 is bullish, working against the 20-day moving average. Again, we've not had a close below it for now 43 straight sessions. That's crazy. So when I'm thinking about it, Brent, the trend feels extremely bullish, and yet with a banner of resistance above us, can traders take some off here just to maybe reposition? I mean, obviously the barrier to re-entry on any dollars you take out of the market here is negligible, right? If we do in fact break through. So what are some of the tactics that some traders might employ here?
Well, you just alluded to one, Kevin, that is you can lighten up your position. Another thing you can do, and stops aren't guaranteed, is you can tighten up a stop. Each of these times we break through an old resistance and we're then kind of deem it a new support level, that becomes a new potential level below which we may consider moving a stop up on some shares. And then if once you become more confident in the market, you can then re-enter. Those are all risk management standpoints. And when we say lighten up the load, lighten up, you don't have to put a stop on on all your shares is one approach. You can sell out some of your shares if you were concerned. And if you're not concerned, then you want to do this. But we're just talking about some of these management techniques here. Mm-hmm. But just realize there's always partial position sizing. Likewise, if maybe you've been out of the market and you want to get in, but you're a little bit hesitant, a little bit worried, maybe you don't consider always buying a full asset, a full allocation to a particular position. Maybe you're dipping your toe in the water, so to speak, and getting in gradually there. So, we'll see. I don't know. I mean, if you kind of think about the market, starting in, what was it, end of February, towards the end of February, we started to come down with perceived risks. With a lot of it has to do with the tariff discussion, and we bottomed out. And then what the market seems to be doing is we're taking off we're discounting the idea that it's going to be kind of this worst case scenario. Initially, it was kind of like, oh, this is going to be a really bad scenario. And the market seems to be saying it seems that's unlikely. It doesn't deem that to be a credible risk. Same thing last week. There's the conflict in the Middle East. The market sold off a little bit, at least, not a ton, but a little bit. And then news over the weekend of the ceasefire. The market tells us how much it's perceiving the credibility, so to speak, of the risk. And right now, it seems like it's saying the risk isn't that much more than it was back in mid-February at this point.
Yeah, it appears as though the softening and the delay, the 90-day pause, if you will, has really benefited us. The problem with the pause is that it's likely coming right back to the headlines again here in the near future. Probably in the next week or so, we're going to be hearing about this, right? It's going to make narrative headlines again. So that's something we have to pay attention to, isn't it?
Yes. Well, regarding, like, say, the tariff, there's a deadline coming up in, I think it's a couple weeks, but we've shown we're willing to kick the can down the road a little bit, so to speak, on the tariff and say, hey, well, it seems like we're negotiating in good faith. Maybe we're going to push that tariff implementation, the whole reciprocal tariff thing, down the road a little bit, because the reality is, if you look at how long tariff negotiations typically have taken across different countries over time, they're a lot longer typically than there's something in the order of like 18 months, 16 months or something like that, which is a way longer time frame than what we've been given it here. And so there's a feeling among some investors, at least, that there's a good chance, if we don't have the announcement, so to speak, of a tariff resolution, that
Mhm.
we're willing to kick the can down the road a little bit. And I think that's de-risking the market, or the perceived risk in the market.
Yeah, I agree. I think we have to really, we can't ignore things just because the headlines aren't being thrown at us. But you know what? That's really what our market's about. We digest headlines these days in an expedient fashion, and everything gets digested as quickly as possible. When we have uncertainty, it can last a little longer, of course. But as we see some of those risks kind of removed, or maybe not removed, Brent, but maybe just less discussed in
Yes.
the overall media landscape, well, then we tend to forget about them, and we get a little bit excited, and we start to think that things are fine, and we can kind of miss the forest for the trees. Now, in terms of the action we're seeing in the market, all of the price action remains bullish, to the extent, though, that we've got resistance up above. So once more, try and be aware of where we reside, aware of your comfort with your positions, and look for ways to manage your positions to a point of your comfort. And I'm going to leave you with one final note, as not specific to the SPX, but really just in specific to your trading process. And that is to, when you evaluate your levels, look at those levels with a serious eye, as though you can make it to those levels in support, and find out, can you manage your portfolio if you got there? And further, Brent, I'm a fan of saying, hey, this is where I think support is. What if we took out support and went 5% below it, or 10% below it? You have to conceive of scenarios that you don't think are possible, and that's what is going to give you the reason to start laying your plan for exits if things change, if things shift. This can go both ways, though, Brent. I mean, if we break through 6150 with conviction here, we stand the opportunity for a pretty strong rally. So, I mean, you have to balance both of those, don't you?
You have to be open to being wrong, and because it's going to happen all the time. It happens to me. It happens to everybody I know, and so we need to approach the market with some humility. And no matter what your conviction is, you may be very strongly of the belief that the market, the whole economy is going to go into recession, but you know what? You may be wrong, and so you need to prepare for that, just in case. You need to come up with the initial, in order to trade the market or trade an individual stock. You need to have an idea, a thought, a thesis, if you will, of what's going to happen. But you also need to have contingent plans in case it doesn't come about.
Yep, I agree with that as well. Of course, we talk so much about having that thesis and giving yourself the roadmap to your trading process. Give yourself the ease of decision making by just giving your ideas, putting them on paper or digitally or otherwise, right? So that you know how you want to act when things occur. So I think we know pretty well where things will change, where things will shift as it relates to these levels. So let's peek in on our NASDAQ 100. We are up about 0.2%. We pushed through let me lift this, my Fibonacci level. We pushed through two all-time highs here, Brent. I mean,
Yes,
like
we
you
did.
said, we were just through it yesterday, and some would have said, oh, we got through it. That's kind of a weak finish. I mean, just a sense that we didn't really explode through resistance, but you are getting a continuation move today, Brent. So pretty hard to look at this as anything other than bullish right now at the moment.
Correct, but caveat, we're only, I don't know how long we are. We're 15 minutes in the day or something like that, the trading day. So things can certainly retrace right now. That high, that old high, which we hit back in February, that breakthrough here at this level, now that's a potential, well, is that a breakout at this point yet? I mean, we can go and say, well, I need it to, show me the money, so to speak. Let it. I want it to establish that level, and we haven't established that at this point. We've broken through it, but it may be a couple days, and so a lot of times what traders will like to see is a little pullback and bounce off of that. That may not happen exactly that way, but we want to see that kind of solidify in place there, so to speak, as a support level. But by saying that, I don't mean to discount the move that we've had. We are at an all-time high. That's saying something in the midst of think of all that's come about over the last few months with geopolitical risks, with concerns about the U.S. market and U.S. policy and the economic future, and yet the market right now is all-time high.
Exactly. We try not to fight against what we see on the tape. Some reminders here. Some of you might be feeling a little bearish or a little worried. And in terms of management and such, remember, there's a couple of ways to do it. As Brent pointed out when we were talking the SPX, you can be generally bearish by just lightening up your long positions and building cash. You don't have to take bearish positions if you're feeling bearish. Just cash can be a larger position when you're feeling a little less comfortable in your bullish viewpoint. Additionally, if you do want to be bearish, at least from a trade standpoint, it makes a lot of sense to allow the buying pressure that's been pretty evident for the last 3 days now in the SPX and the NDX. Let that subside. Let it show you that has run its course, that momentum is leaving before you start taking positions. If you start taking short positions or bearish positions in the face of a momentum move to the upside, it's a real problem for a trader. It can be a terrible, painful decision. So remember that, we talk frequently here about really trend trading the trend, looking, if you want to be on the long side, taking stocks that are in higher highs, showing you series of higher highs and higher lows, already trending upward. That's a more comfortable process. Well, you have an uptrend in play here. Try not to fight against it unless and until things change. So just be cognizant of that. You do have a couple of levels here as well to consider. Gap zone from yesterday into this morning, gap zone from Monday into yesterday. You can absolutely start building cash just by selling off a little as you go on weakness, if that's your preference. Now, one final note here, Brent, is the RSI. I have that down slope to the recent highs in RSI, but it's way too early to call that really a bearish divergence. I'm of the belief when I look at the RSI, the more important thing is the fact that our lows in the RSI, as we've continued to make new highs in price, have only retreated to what we would consider to be oversold conditions around the 50 to 55 level in the RSI. That to me spells bullish behavior relative to price action.
It's hanging in there, and I hate to kind of micro evaluate and put too fine a point on the RSI in terms of levels and exact, a lower, we did have a lower high on that RSI, but boy, I'm not going to judge the whole market on that. Mm-hmm. I'm not going to judge the whole market on the RSI in the first place, but the fact that, we had some lower highs, but really we're at 67, 68 on the RSI. That's not, it's very bearish that very rare you would call that a bearish situation where we're poking back up to the levels basically we were at the beginning of the month. It's not getting much lower there on that. So I wouldn't read too much into that RSI. Chris B in the chat said, so Powell's speaking, he spoke yesterday, he's speaking again today. Chris B, hey, could the talk, is his speech going to move the market? I don't know, Kev. I don't know what else he could say at this point. I think he's been pretty transparent about what his feelings are on this, and that is we're going to wait. He said yesterday, he's worried about some inflationary data from tariffs in June, coming up in June and July numbers. And that seems to be what's keeping him from pushing to cut rates. And that is, hey, it's just, he doesn't want to jump the gun, so to speak. And so I don't anticipate he's going to say anything different today, but who knows? You don't know what you don't know. We don't know what he's going to say. So I guess it's possible, but I'm not sure that's going to change this that much. Here's the Fed rate tool, Fed Watch tool. Kev, what do you see?
Yeah, and we're looking at July. And we haven't seen a whole lot of change here. I mean, it's up a little bit. are down a little rather since the last week when we've heard him speak, and down a little, but 80% likelihood of maintaining and staying the course at our current levels for July is where traders are positioned right now. We don't know if that's actuality, of course, because this is merely how traders are positioning. If we go forward to December, you'll notice that we start to see a much greater willingness of traders to put their money on the idea of cuts between now and the end of the year. By December, I mean, the greatest likelihood, according to traders, this is nuts to me, Brent. This is 50 bips below, 50 bips below from where we are right now. Traders are positioned to believe that we've got a nearly 40% likelihood of a 50 basis point cut between now and the end of the year. That still
I think that's 75. Yeah, that's 75, isn't it?
Let's see. We're at 425.
425.
You're right. I'm sorry. My math was wrong. Yeah, 75 bips. So somewhere between 50 and 75, a high likelihood, according to traders right now. Again, but I got to point this out because, Brent, traders have been wrong every step of the way for the last year and a half. So take this with a major grain of salt, right?
Absolutely. Absolutely. I remember, was it last year? My years are melting together here, Kevin, but there was like an expectation of 5 rate cuts or something like that. And it just, we ended up with 2 or, this is an ever changing tool, but it does give you an idea of kind of, so in other words, don't use this to come up with a specific number of rate cuts.
Exactly.
You can use it to kind of come up with like what the market is kind of generally posturing itself in terms of rate cuts and what the expectation is. And when that starts to shift significantly, it certainly can affect the market. And the market tends to like the idea of rate cuts as long as the rate cuts aren't coming about because of really terrible economic data. I mean, if we dive into a deep recession, we're going to probably see a lot of rate cuts there, but that's not helpful to the market either. So
yeah, I totally agree with that. And Brent, we had a good question in the queue here from Merrick about identifying that maybe a strong market rally is losing momentum, rally is fading. Brent, this really brings us back to the conversation around trend trading and working with whatever trend is most evident in your period of time that you're trading. And right now, Brent, I mean, it's that 43 consecutive closes over the 20-day moving average. Still not having a close below the 20-day. Monday was an excellent example of this, right? We had a weak open. We traded below the 20-day moving average on the NDX and on the SPX both. And yet buyers stepped in there, Brent. And so it tells us that even though momentum at that window was waning in here, that was merely, to this point, clearly consolidation, just allowing price to get caught up, right? Or allowing our moving averages really to get caught up. Even though we saw a little slowing in here, it didn't break the trend. So if you were the trader who said, well, this slowing is my indication of that lack of momentum, and therefore I should be reducing position size or what have you, my hope is that you may have used yesterday's gap through that potential resistance as a reason to re-enter some of those short-term trades. Because by taking it off in the last 2 weeks, you were just basically saying, all right, I'm uncomfortable with this sideways, even though price action didn't give you a reason to sell out of these positions at this point.
Yeah, just a comment, an observation I see from traders very often is that is they'll see the stock is or the market is below a high, and that they point to a high that's above where they're at, and so they say, well, that's a resistance level. But the thing is, unless you're at an all-time high, which you actually happen to be today, but but unless you're at an all-time high, there's always going to be a high above you. And if an upward trend is a series of higher highs and higher lows, by definition, we're having to break through previous highs to get to the new level. So if you believe in trends, then you have to discount a little bit how much resistance any individual previous high is going to present for the market. Now, the more times it's bounced off it, then generally we're going to give more strength to the resistance level. We're going to deem more strength to it. And, there may be things like, oh, it's a big round number. It maybe have a hard time getting through it or things like that. But just because we've reached a high previously, don't automatically assume that it's going to prevent the stock from trending through that, because uptrends are higher highs and entail higher highs. And that's what we're seeing right now. Now, having said that, we could drop back down into this slot, this channel that we've had, and that would maybe a very comfortable level for this. As we talked about earlier, time will tell. Maybe a couple days before we know whether it's I think Ricebird said is a breakout or a fake out. We'll see on that.
Yeah, as usual, we're going to encourage you to have already determined what you use for confirmation. Is it a couple of days above a resistance level on a closing basis? Is it more than 2 days? Whatever that is for you, make sure it's well defined so you know how you're going to act when you get what you deem to be confirmation coming through in the form of price action. Let's look at the Russell. Before we talk about it from a standpoint of the price action, I wanted to answer Rita's question here. Rita was asking about getting rid of the after hours detail on an intra-period chart. And I always love just giving a teaching moment real briefly as it relates to Thinkorswim when we can. So I'm just going to kick over to the 5-minute bars real briefly. And it's a gear detail here, everybody. So we'll go up to the gear and we'll change to the tab along the top here, equities. And down below, under axis is where you'll see your ability to highlight and show the extended hours session or show it but not highlight it. So the difference there, of course, is if you have that little gray banner down below. So on something like an individual style, let's just go throw Apple in here real quick. You can see my grayed out area. That is all of our after hours window. And if we go back to the equities page, I can eliminate the grayed out part, still see the after hours trade activity, or I can eliminate the trade activity altogether and I can go that route. And then that's changing everything you're seeing on your chart visually. Okay. So now you're not getting any price action from the pre or post market sessions. So that's a preference scenario as usual, everybody. So make sure you've got it built the way you want. Set your details as you would prefer. Okay. Brent, looking at the Russell here, let's go back to the rut. When we had rallied once more back into that 200-day moving average approximately, meeting the highs we had made just about a week and a half, 2 weeks ago now, it looks like once more the 20-day provides good support. Horizontal ledge once again at 2110. We've talked a lot in this class about 2110 on the Russell. But now it appears as though we're breathing once more at the matching high we just made.
We are. And to my prior point, so we have had a high. And in fact, that high may even match up with some prior lows like back in at the end of the year. As a potential resistance that matches up with the 200-day moving average. So there's, there are some reasons to deem that a resistance level, but right now the trend, we've been getting higher highs for a while. And so would it shock me to break above this latest high? No, not at all. But very different chart here. Both the S&P 500, the NASDAQ, we've been talking about all-time highs. We are a long ways from any all-time highs on this chart right now. But for a trend trader, I think you need to take that trend seriously here at this point, regardless of the potential resistance right above it.
Yeah, I think so too. We still see a series of higher highs and higher lows. Now, matching highs, I should say now. Yep. Obviously, pushing through the 200-day would be significant for the Russell. But just as significant is the fact, again, that we've been above the 20 days since April 23rd. And that's the same across all three major indices, everybody. The same date for all three.
Yeah, and one other thing I would point out is you have a green line on the chart there. It was a potential resistance that we were dealing with. We broke through that, and kind of what we were saying earlier is sometimes, it actually stayed above it for a little while and came down and it retested it. Mm-hmm. And it seems to have held. And so that is a trading signal that a lot of traders like to see, because if you go back to, I don't know, early June when we broke through it, you could be saying, well, look, we've gone up a little ways. I'm worried about getting in at this point. But when we go and retest and then we bounce off, that is kind of another opportunity, if you will, to potentially make an entry into a particular stock or index there.
Yeah, I'm watching Dragon Rider's comments. The market has a life of its own. It goes up considering all news. And that's entirely true, everybody. One of the main concepts of technical analysis is that all that is known about an equity, about the market, about an index, all of that is built into price action. So nobody knows anything that the rest of us don't, at least in the way of headlines and price action. And price action dictates and maybe tells us a little bit more about the belief in what's happening in the marketplace here. Brent, we've had incredible move of late in the semiconductors, which actually got finally back to our major band of resistance here just this week. We are now in that massive zone. Question now becomes, can we actually push through, or do we get pushed back once more? It might need a pushback for a test, given the springboard we have seen from the last significant move, which was right about here, I would say. And that it's been about a 20% move over the last 6 weeks or so.
Yeah, big move in semiconductors. We'll see. I think a lot of this, and you can see that kind of reflected in that RSI at the bottom of the page. We're up above we're above the 70 level right now. Doesn't mean it's going to come back down or anything. And even if it drops a little bit, look, if we're on the upper end of that zone, you kind of highlighted there, that's a range it seems to have established. It would be, if we break below that, that would be a little bit of a concern. Break below that, break below the 20-day. But look how far we are above the 20-day. A lot of this is probably driven by NVIDIA, which has just been on a tear lately, Kevin. And kind of the old narrative of, hey, semiconductors leading the market right now. Well, that's actually happening right now. They seem to be leading again right now, which is, I think a lot of traders would deem that to be a pretty healthy thing for the market, to see semis specifically, but technology in general leading the market up. Obviously, we weren't that way for quite a while here, but that's maybe, I think a lot of traders view that, would deem that to be pretty bullish for the market.
Yeah, I think so too. One of the things we do know is that when we were moving, let's change this to a 2-year quickly, just to highlight this maneuver. But when the semis were rallying aggressively like this, up 88% over about a 6-month window, or about a 10-month window rather, in terms of calendar days, I guess, that was carrying the overall market. I mean, we moved aggressively to the upside and now we've managed to be back to highs without necessarily the participation of the stocks in terms of leadership. And if we're back to a market that is going to be led by semiconductors again, a lot of traders are going to tell you that that is a positive catalyst for the broader indices. We'll see if it plays out that way. Obviously, we don't know, especially when we reside at such a lofty level, lofty in the sense of where we've been, right? I mean, again, if we just looked at where we were, I mean, a 60% rally in the last not quite 3 months has been just tremendous. So it's been wonderful, but in order for the semis to provide leadership, it would need to break out here. And it's been a really nice development, but we wouldn't be at all shocked, I don't think, Brent, if we took a pause up here, breathe sideways, even got thrown back to the 20-day. We should at least expect some semblance of a throwback, no?
We've come up a long ways in a short period of time, and probably more often than not, when you see that either on an individual stock or an index, it takes a breather here. And it doesn't mean it's going to retrace a long ways, but just a sideways pattern. I mean, that's kind of the principle of, in the shorter term, when we look at flag patterns, is the stock moves up a ways, that's your flag pull, and then it retraces a little bit, either kind of sideways or down a little bit. That's your flag. And then the expectation often is it's going to then resume an upward move after this consolidation period. So it's not a bad thing. In fact, it's probably a healthy thing, because otherwise you really start to worry about bubbles in the market.
Yep. And of course, as it relates to semis, pay attention after hours today. We are going to be hearing from Micron offering their earnings after the bell. That is a potential market moving catalyst, so pay attention to that. Brent, we had a request to hit up oil, and we should always check on oil. Had a huge maneuver with it of late, and we're seeing here a throwback to a potential zone of support. But, you know, the big reason for the spike, obviously, was the turmoil over the weekend. And now the belief, apparently, is that the Strait of Hormuz will not be closed, or will, if they try to, would not be successful. And the impact to supply being far less than was initially concerned and feared.
Yes, definitely. So that's why we've gone on this kind of roller coaster ride on oil, and so we'll see. I mean, oil was at a very low price for quite a while there, for you know, and so you know, you'd probably expect it not to. It seems unlikely it's going to drop back down to the mid 50s levels like we had before just a month ago, but. Clearly, you know, you can kind of you can judge your geopolitical risk here with oil. But let me just bring up one other point with oil, and that is oil, when kind of bad things happen in the market, the market typically goes down, and most segments of the market go down when bad things happen in the world geopolitically. Oil's opposite. Oil tends to go up when there's geopolitical problems. Mm-hmm. And so from the standpoint of a portfolio and allocation, that is why some traders will have some exposure to oil, whether it's in the form of futures or ETFs or mutual funds or whatever it is. They like to have some exposure to that, to try to help balance out risk in the asset allocation. Now, that's not a recommendation or anything, but I just want to point, that's one reason why people do trade oil and have exposure to oil, is if things really bad to happen geopolitically, it can help that. Now, hopefully it doesn't. Hopefully, you know, the world, we all, you know, hug each other and everything is great in the world, but it's just you know, in this case, it seems like the risk has fallen off, and that's clearly is what driven oil over the past couple of weeks.
Yep, and you know, you could be forgiven for thinking that this was going to develop into a much bigger maneuver. There's plenty of reason to have thought that in the last week plus, but clearly a lot of that, at least the way traders have positioned, is that a lot of that initial immediate risk appears to have left the market of late. So now, we could still see oil well supported here at around 63 or so. Notice the 50-day moving average here at around 63.38, right beneath us. And clearly we've been above the 50-day now for about the month of June. So maybe we've just established a new floor on oil, at least in the short run. We'll see how that happens, or how that maintains around 63. But it is notable that we moved through that, made those short-term highs, and have now retreated right to that same level. That's not an uncommon maneuver from a price action technical analysis viewpoint.
Correct. And to Sia's point, Sia said oil will gap up if the Strait of Hormuz shut down. Oh, yeah, I certainly would be shocked if it didn't in that case. And, you know, we have a ceasefire in the Middle East right now, but it seems to be kind of tenuous, so to speak. I don't know. It's, you know, I wouldn't bet my life on that, you know, holding. We'll see.
I like your word. Tenuous seems to be the proper word there. Nothing wrong with being a little cautious here. Okay, Brent, let's look at a couple of these movers today in terms of our sector action. Our leadership is from tech and communications, tech breaking higher. Now, we have moved through a major level here with the moves of the last 3 days, haven't we?
Yeah, not just a breakthrough, but a significant breakthrough. So, you know, when we're trying to say, has a resistance broken, often we can do it basically on terms of time, you know, if wait 2-3 days or something like that, or but to the extent, the magnitude it's broken through. In this case, well, we're a second day into it, but the magnitude is it's a pretty significant break above that. Going back to our previous discussion on semiconductors, technology leading the market up, and a lot of traders would deem that to be a good thing.
Yeah, that green banner line or line I put in here, right around 47.60 maybe, 47.55 might provide some horizontal support. Again, reminder that from a technical basis, we frequently get the breakout and pull back to the supportive area. Recently, the pullbacks have been the 20-day here, even in tech. So keeping an eye on the 20-day makes a lot of sense. The question is, do we get a reversal move that allows you to test the 20-day, or do we get something like we went through in the last 2-3 weeks here, Brent, where we just kind of meandered sideways? There's my meander word coming into this session as usual. So it's always the question, do we get the bigger drawdown, or do we get the price consolidation over a window of time, just kind of moving sideways? So looks good from a bullish standpoint, at least on the tech sector. RSI moving into overbought conditions. That's a positive. That looks like the highest we've seen the RSI as well. So many traders would tell you that that's confirmatory in nature on the tech side here. Let's hit the communications as well real quickly. It's a little different, Brent, but I note that really the big move was, again, Monday's week open that brought bulls right back in, and now we've managed to trade through the downtrend line with today's action. So this might be setting up for a bullish view in the short term as well.
No doubt. I mean, that's kind of like a little flag there, isn't it, Kevin?
Yep.
We had a pretty strong move up, and strong moves up usually don't go on indefinitely. We have a consolidation, and then the breakthrough. Some traders would use that as a potential entry, the breakthrough on the flag there as a potential bullish entry. And those flags are generally healthy on the market.
Yeah, that's true. My goodness, we are just flying through time, Brent. I wanted to make sure to hit up some of these additional stocks that may be in the news today. There's a couple of them. One of them, I see a lot of comments on it. Don't really have not an upgrade, not a downgrade, but Tesla is in the news today when car sales in Europe fell. So let's get the right symbol in there. There we go. And so we are seeing some weakness on Tesla today after a really strong push recently here. New car sales in Europe fell by nearly 28% in May on a year-over-year basis, despite fully electric vehicle sales in the region climbing 27%. Yeah. So that stands out. Not just that they lost, but they lost relative to their peers, Brent.
Yeah, Chinese EV makers are gaining more and more market share in Europe right now. Not really seeing that in the U.S., but we are seeing that in Europe, and that's obviously not a great thing for Tesla. Obviously, there's a couple things. EV sales are big for Tesla. Their robo-taxi launch is something was, I think, deemed largely successful, and that tends to be pushing it. That's maybe more of a tailwind for it, but European or Chinese competition may be a little bit of a headwind.
Yeah, maybe. So I wanted to make sure we brought that up because it's given back, but it was a really great move after it took out this kind of consolidative triangle here. I'm working through the 20-day, but if you were looking for confirmation, you're back below the 20-day here on day 3. So that might be a negative for some traders. A couple of upgrades today, and I wanted to mention, and they're interesting. 2 of them are in the Staples area. One of them is Yum Brands. JP Morgan upgraded Yum. Oops, that's the wrong symbol, everybody. My apologies. There's Yum Brands. So JP Morgan upgrading Yum Brands here to overweight from previously at neutral. New target has actually been reduced. They were around 170. They dropped it to 162. But some traders would suggest that today's action, getting through the 50-day, could be a significant development in the short run there, Brent.
Yeah, I mean, that's a strong move, and we'll see if that holds. But it does look like right now we're up near watching intraday and see where the stock closes compared to. I mean, it's probably very likely it will be a higher move for the day when all is said and done. But do we close closer to the low pricing of the day or the high price in the day?
Yep, good one there. Good reminder there. Day 1 above the 50-day might get some traders back into Yum Brands. The other one that stood out was an upgrade on Kraft Heinz from Goldman today. The reason it stood out to me was the ugliness on this chart, Brent. A pretty clear downtrend here, but upgraded nonetheless at Goldman to neutral. Had previously been at sell. New price target at 27, which is up from 25. Not exactly a screaming increase or a screaming upgrade, is it?
No, it's not, and the stock is reflecting that it's the stock isn't really reacting that strongly to the upgrade either.
Yep. So, as always, I wanted to bring it up because I will lament the companies that give you an upgrade after the stock has made a 20% move. So I'm going to give Goldman the benefit of the doubt here. Hey, good job. You're looking at an ugly chart. There's very little to like on this chart. They've just shifted from being a sell to a hold. That's not not a double upgrade by any stretch, not going from a sell to a buy, but I thought it was pertinent nonetheless. But
yes,
clearly below the 20-day, a downtrend remains in play.
Yeah, I know we need to wrap up here, Kevin, but let me just say, what Goldman would say, I mean, I can't speak for them, but I think what they would say is, hey, this is a longer term view. It's not a, hey, we're not looking at the past. We're looking at the potential for the future. And that's really how it should be, I guess.
Yep, that's a great way to end the class, Brent, as always. And needless to say, love having you on Wednesdays because we get some excellent insights, and hopefully all of us continue to learn from the joint conversations we have here for you all. So thanks for joining us today, everybody. Take a minute and follow the three of us on X. Make sure you're subscribed to the Schwab YouTube coaching channel. And if you liked our discussion today, hit that thumbs up button down below for us. We're going to get this one out into the archives a little later today for you all, and that'll help us in the replay as well. Keep it tuned to the Schwab channel here. We've got trading index options on deck with Ben Watson. Thank you for posting that, Barb. Hope you all have a wonderful rest of your Wednesday. We look forward to seeing you all again real soon.